Let's take a look at the route in gold, which is not showing any signs of slowing down. Gold had the biggest intraday decline in 2 years. It has fallen more than 4% before bouncing back, but it's still trading around a 5-year low. Joining me now from the CME is Todd Horwitz. He's founder of AverageJoeOptions.com. And Todd, we're going to try and hit the futures trifecta again today, gold, oil, and the euro. We'll see what we can get through. Got to start with gold because of the route that we have seen. But classic here, you're saying come in, now is the time to buy. Maybe we're seeing a bottom in gold.
Good morning, Julie. Yeah, what we saw, and especially overnight last night, if you were paying attention to the overnight action, gold was actually down almost $50 overnight before rallying back, and the last I saw it was down about 20. This would be a classic blow-off bottom where traders and investors alike, to use a technical term, puked out and they couldn't take it anymore and they dumped out of their positions. That's usually a great sign that you want to see buyers will start to step back in, because we have reached, as you said, almost 5-year lows. I think we're at a great level. We're way too wide compared to where the S&P is. The difference between the two is one of the greatest it's been in the history. So again, a lot of reasons here that gold itself looks to be a buy. Because we've got all the bad news in that's pushed the prices down, and I can't imagine there'll be any more bad news that would help gold go lower than here. So I'm a buyer right down here, about 1,100. Go ahead.
Just quickly here, I mean, you're talking more about sort of the technical side of things. Are there any fundamental reasons to buy gold here? You're saying maybe there's not any reasons to sell anymore, but what would be the, fundamentally, what would be supporting gold?
Fundamentally, if you look at gold, first of all, it's a hard asset. It's a commodity that I think that everybody should own in part of their portfolio. I'm not one of the guys who believe that gold is another currency class or a defender against the weak economy. I think gold is a hard asset that typically appreciates in value like everything else. And if you compare it to the S&P, the S&P is twice as much as gold is now, which is one of the largest discrepancies in history, which means that we should see a divergence back into that. And fundamentally, we've seen probably a low point here, and there will be some accumulation in gold at these lower prices to help some of these companies out that are the miners and things that are just getting slaughtered as we go forward here. So at that point, I think it's time to want to be a buyer, because I think it's a good hard asset to hold.
Gotcha. Let's turn to the next asset that we're talking about, which is oil. Oil, too, has been seeing declines, and of course that Iran agreement didn't help matters any. Where do you see crude going from here?
I think crude probably will find a pretty good base here around $50. When you look at the Iran deal, that was already pretty much priced in. And we have seen a tremendous drop in a lot of the oil services stocks. And, Halliburton has come down significantly from $50 back to $40 again. You've seen a major punishment down here. Now those are starting to base and make bottoms. Fundamentally, if this economy is going to be a good economy, which everybody keeps telling me how good it is, that we're going to have a demand for oil. It's not something that we can live without. Now, one of the good signs is that the United States has enough of its own supply, and as we go further, Iran is really nothing in this big picture. It was just purely a news item and a reason for people to push it lower, but I think they've pushed it to the extent, which is about $50. I think we move higher from here.
Gotcha. Todd, unfortunately, we're going to have to leave euro for another time. We're out of time. Todd Horwitz, thank you so much, though, joining us from out in Chicago.